A admission question. See, this is for CBSE 2024 past paper. Okay. So previous question paper. Sarah and Varsha were partners in a firm sharing profit and losses in the ratio of 3:2. So when reading itself, understand this is the old ratio, right? Before the admission, 3:2 is their old ratio for Sarah and Varsha. Their balance sheet as on 31st March 2023 as follows. So here liability and assets are given. So first of all, understand the accounts required for preparation of this question. Preparation for this question, that is preparation of the revaluation account and partners capital account. These two accounts are required. So here for revaluation account, we need the revalued amount, difference from the revalued amount, right? So first read the adjustment properly. On 1st April 2023, they decided to admit Tasha into new partners with 1/4 share. So this is the new partner share 1/4, right? Share in the profit of the firm from the following terms. Here Tasha brought 40,000 as capital. So her capital is given as her share of premium for goodwill. 40,000 is the capital and 20,000 is the premium of goodwill. So share and plant and machinery was valued 1,90,000. So plant and machinery, it was 2 lakhs. Now it is revalued to 1,90,000, isn't it? So it is reduced. Okay, so it will go to revaluation account, assets reduced part. An item 20,000 included in creditors is not likely to be claimed and should be written off. It means this 20,000 rupees from the creditors which is not likely to be claimed. It means you don't need to pay it back. So it means your liability is decreased here. So the liability is decreased. Okay, so that also we will consider to the revaluation account. Then capital of the partner in the new firms are to be based on new partner's capital. So this is a capital adjustment question. So from here you can understand this is a capital adjustment question. Even though capital adjustment, there are two types. Capital adjustment will either sometime it will be on the basis of proportionate capital. So you will not get the new partner's capital. So that you need to find out for the proportionate capital question. Right, in this question, this is on the basis of new partner. We need to find out the closing capital or the new capital of the remaining partners. This is the second method, on basis of new partner. On the basis of new partner capital, we need to find out the old partner's new. Okay, new capital. So these are the two expected capital adjustment question from admission. Either it will be proportionate capital or on the basis of a new partner's capital. So this is the second one. Okay, this question is related to the second method, right? Proportionate also we will do one question. So here first requirement is we need to prepare revaluation account. Okay, so first we will prepare a revaluation account. So you need a ledger account like this. There will be two sides for the ledger accounts, debit and credit side as usual. So here there will be amount, and here it is particulars. Here also particulars. Here you should record debit, here it is credit, and write revaluation account. So understand before doing, if assets are increasing, that difference, only the difference will be considered here. Okay, if the assets are increased, we will write that difference here. If assets are decreased, the difference, that also difference only. Don't take the net book value. That difference you will write here. Correspondingly, the liabilities also. Liabilities increased, it will be the difference will be here. If the liabilities decrease, that difference will be here. Okay, so and if there is any other expenses or any outstanding expenses, etc., that will be considered here. Okay, so this is the format of revaluation account. So first we will check the items from the adjustments, right? So first check which is revalued here. So you can understand from this question. This is a plant and machinery This is the revalued one. Plant and machinery you revalued to 1,90,000. So see here, from this 2 lakhs, it is decreased to 1,90,000. So there is a reduction of 10,000, isn't it? There's a reduction. So it means assets are here. Asset is decreasing, isn't it? So assets decreases. I told you, if asset decreases, we will record in the debit side. So to plant, and so write the asset name to plant and machinery. That difference, it means what? That 2 lakh minus 1,90,000. Okay, 1,90,000. That is the difference that will record here 10,000. Okay. The next one is an item of 20,000 including the creditors is not likely to be claimed and should be written off. It means the liability is decreasing. The liability was how much? 50,000. From this, a 20,000 worth creditors is not likely to be claimed. So you don't need to pay it, right? That's the meaning. So it means the liability decreases. It will be in the credit side. So write creditors. Creditors. The difference is it means the 20,000, right? From that 50,000, 20,000 is likely. Only 20,000. Is not 20,000 is not required to pay, right? So you can take that 20,000 here. Okay, here you don't take the difference, okay, because here they given exactly the value which is reduced from the creditors, so we can directly take that value. But for the plant and machinery case, it was different. Okay, it is revalued to lower, so we need to find out the difference. Here the difference is directly given as 20,000, right? Or if it is given like instead of this 20,000, they said creditors likely to be pay only 30,000. Then you can take that difference, okay, which is not likely to pay the 20,000 only, right? From the 50, 30 only we need to pay, means 20,000 no need to pay. So like that. Here in this question, it is directly given an item 20,000 including creditors not likely to be claimed. So that is the difference. Understood, right? So here, apart from this, we don't have any other revalued items. So we can directly go to the calculation. So find the difference between debit side and credit side. So obviously here credit side is higher, isn't it? 20,000 is the highest amount. So write that 20,000 in the both the sides. The difference is 10,000, isn't it, in the debit side. So you will write here that this difference will be shared by the old partners in old ratio, and it will be transferred to the capital account. So to profit, transfer to capital account. So Sarah and Varsha both are the old partners. Okay, so their ratio is given here. See, 3:2. So it will be shared by Sarah, and so it will be 10,000 into 3 by 5 and 10,000 into 2 by 5. This will be the ratio. So you will get here 6,000 and 4,000. Okay, 6,000 and 4,000. So the 10,000 is shared. This will go to the credit side of your capital account. Okay, right. So this is the revaluation account. Now we need to prepare next one, capital account. Okay, so capital account, we have 3 partners. We admitted a new partner. Her name is Tasha, right? So here you can prepare capital account. So here also we need 2 sides. So first debit side and credit side we required. So just drawing here. Yeah. So first column, second partner. We have 3 partners, right, including new partner. So 3 columns. Credit side also same. 2, 3 columns. Okay, 3 columns. So write the names. Here it is particulars. Sarah, then Varsha, and Tasha. So Sarah, Varsha and Tasha particulars here also. Here it's debit, credit, right? Partners capital account. Partners capital account. Capital accounts. So this is a partners capital account. So always it will opening balance will be the first item for the partners capital. Okay. So balance brought down. This is the opening balance of all the partners. In this question, all the partners opening balance are given, right? First, we will write the opening balance of the old partners. Okay, this you will get from the balance sheet. Here you can see capital balance 50,000. This is the opening balance. Okay, and new partners balance is given here. Tasha brought 40,000 as capital, isn't it? That 40,000 you will take separately here. You don't take it with the balance brought down, okay? Because this is not, we will not get it from our balance sheet. So we will write here separately, though she brought by through cash, right? So cash account, that is 40,000. Sorry, not here, the third column, okay? 40,000, right? Next after the balance or the opening balance, directly we need to check whether do we have any reserves exist or not. So these are the main reserves: workman compensation reserves, investment fluctuation reserves, and general reserves, right? So these are or it is also known as workman compensation fund. Okay, so these are the three reserves we need to distribute. So here we know that we have workman compensation fund. See, provident fund will not be distributed. Okay, provident fund is not a it's not a reserve. So this is for the employees. Okay, but workman compensation reserve is kept aside from your profit, and this will be distributed to the old partners before the admission of new partner, because it is this is eligible to get for the older partners, because it is the profit we kept aside from their old profits, okay, from the last year's financial state OP and L account, right? So first we check the reserves, and also check if there is any profit and loss. Sometimes there will be profit or loss account in the credit side, asset side of the balance sheet, or sometimes it will be in the debit side also. So these are the two items we need to check. So in this question, that P&L account is not given, so workman compensation reserve is given, so that we need to distribute to the credit side of the capital account, because credit side means what? Credit side means plus, isn't it? Debit side means minus, because capital account is a credit balance account. If the partner is getting money, or if the partner's money is increasing, it will be in the credit side. So general reserve is transferring to partner's capital account before the admission of new partner, means partner's balances are increasing, isn't it? So here write down workman compensation fund or reserve. Compensation, here it is given fund. Okay, so it will be shared in old ratio. Old ratio, we know that old ratio is equal to 3:2 as per the question. So here check what is the amount. Workman compensation fund is 20,000, right? This 20,000 will be taken. This will not be taken. This will be taken. Okay, workman compensation fund. 20,000 will be shared in old ratio 3:2, right? So the calculation will be 30,000. Sorry, 20,000, right? 20,000 into 3/5 as well as 2/5. Okay, then you will get it will be 12,000 and 8,000, isn't it? 12,000 as well as 12,000 and 8,000, right? Then next procedure is distribute the revaluation profit. If it is difference is in debit side, means that's a revaluation profit that will go to this side. Okay, this side. If it is loss, for example, instead of this profit, if it is loss, that will be the balance will be this side, then it will go to the debit side of your capital account. Okay, so here in this question we got a profit, revaluation profit, so that will be transferred to the credit side of the capital account. So right here revaluation profit will be shared between the new partners, old partners, that is 6,000 and 4,000. Okay, now we can go to our Yes, then we can go to goodwill of the new partner. Okay, so the goodwill of the new partner, here you can see goodwill of the new partner is 20,000, isn't it? 20,000 as her share of premium. So this 20,000, the new capital brought into the business, it means the old partners will share this in the new ratio, sorry, or sacrificing ratio. So goodwill calculation. Okay, always remember, goodwill means it is the firm's image, right? The value for the firm's image. If a new partner is coming to the business, she is getting all the benefits which already there, right? For example, the firm earned this much image or goodwill in the market. If a new partner is coming to the business suddenly, means they are also going to enjoy all those benefits. That might be in terms of profit or in terms other things, etc. So for compensating that, if a new partner is admitting, then he have to pay a compensation, okay, like a goodwill. This is for that, here it is given goodwill of new partner is how much it is. 20,000 is given, isn't it? 20,000. So this will be shared by old partners. This will be shared by old partners in sacrificing ratio. Okay, sacrificing ratio. Right, if new ratio is not given, normally sacrificing ratio will be equal to your old ratio. Okay, but if new ratio is given, then you have to find out the sacrificing ratio. But here I will show you how to find out, right? We will get 3:2 only here, you can see. So old ratio is equal to 3:2, and new partner share is equal to here it is 1/4 share, isn't it? 1/4 share is equal to 1/4. So from this is the given information. From this we need to find out the new ratio and sacrificing ratio. Okay, the sacrificing ratio is equal to old ratio minus new ratio. Okay, this is the equation for sacrificing ratio, old ratio minus new ratio. But here we have old ratio, but we don't have new ratio, isn't it? So calculation of new ratio. New ratio, we already know new partners new ratio is 1/4, but we don't know the old partners. So first we will check Sarah's. Okay, Sarah. So before that, what is the remaining? New partner's share is 1/4. We know that. What is the remaining partner's share? If new partner Tasha is getting 1/4, means remaining partner's ratio will be 1 minus 1/4, isn't it? So it will be 3/4. Okay, so on the basis of this we will calculate Sarah's new capital. Sarah's new capital will be 3/4 into old ratio. Old ratio was 3/5, isn't it? 3:2. So you will get 9/20, and Varsha will get 3/4 is remaining share, same here, same you will use, and into old ratio 2/5. So it will be 6/20. We already know the Tasha got 1/4. So convert this to base here is 20, right? So you can convert here. So you need to multiply with 5. So it will be 5/20, isn't it? So you can take it as 9:6:5 will be the new ratio. This is new ratio. Okay, this is the new ratio of the new including old partner and the new partner also, right? So now there are 3 partners, that is Sarah, Varsha and Tasha, right? Now we need to find out the sacrificing ratio. So sacrificing ratio is here, the sacrificing ratio is equal to old ratio minus new ratio. So sacrificing ratio you will not calculate for the new partner, okay, because old partners are sacrificing through the admission. So sacrificing ratio for Sarah will be, Sarah's old ratio is 3/5, right? New ratio is how much it is? 9/20, isn't it? For Varsha also, old ratio is 2/5, new ratio is 6/20, isn't it? From here you will get it. Okay. So you can calculate here. So it will be cross multiplication you can do. Sixty minus 45 divided by 100, isn't it? Then 20 into 2, 40 minus 30 divided by 100. So it will be 60 minus 45 will be 15 by 100. Then here it will be 10 by 100, isn't it? You can reduce it. Okay, so I'm taking here 15 by 100 and 10 by 100. So the half you can take. This you can divide it with 5, right? So it is 15 is to 10. 15 is to 10. That will be 3 is to 2, isn't it? So see here, 3 is to 2. You got the same of your old ratio. That's why I told you in this kind of question, if new ratio is not given or any other information related to acquisition or the new partner acquired from the older partner this much ratio, or some additional information related to this is not given directly, this kind of question you can apply the logic that the old sacrificing ratio will be equal to old ratio. Okay, but don't apply this logic for all the questions. Here you will get the same. That's why, because we don't need to waste our time for the examination. So 3 is to 2 is the sacrificing ratio. So goodwill will be shared. Goodwill shared in sacrificing ratio. So that 20,000 was the goodwill brought by Tasha. That will so Sarah will get 20,000 into sacrificing ratio 3 by 5, and Varsha will also get 20,000 into 3 by 5. So when you are calculating, 20,000 into 3 by 5 will be 12,000 and 8,000. So this you will record here in your capital account as goodwill premium. 12,000 and 8,000. Okay. Yes. Now all the items taken now. 12,000. Now we can go to the capital adjustment question. Okay. 12,000. The last adjustment, capital adjustment. See here, capital adjustment question here, it is second method, right? So capital of the partners of new firm are to be in the new profit sharing ratio of on the basis of Tasha's capital, on the basis of the new partner's capital, bringing or paying of cash as the case may be, right? Yes. So we need to calculate the new partner's capital, new capital. Okay. So the calculation of capital adjustment. So new partner capital. We know that new partner brought 40,000 capital, isn't it? From this we can find out firm's total capital. So firm's total capital will be 40,000 into reciprocal of the new partner's capital. What was new partner's share? So new partner share, Tasha's new partner's share is equal to 1 by 4, right? So the reciprocal is 4 by 1, isn't it? So when you are doing this calculation, firm's total capital will be the new partner's capital into reciprocal of his share. That will be, so it will be how much? 40,000 into 4 by 1 means total 1,60,000 will be the total capital of the firm, isn't it? 1,60,000. Okay. Just a minute. Yeah, 1,60,000 is the firm's total capital. So we already calculated the new ratio, isn't it? Previous question we calculated. So the new ratio is 9:6:5. We know, I already shown you how to calculate the new profit new ratio. Okay, calculation of the new ratio. So it is 9:6:5. Okay. So the new ratio is equal to 9:6:5. That we already know. Otherwise, you need to calculate. Okay. So here each partner will get, Sarah will get how much? Varsha will get how much? We already know Tasha is getting 40,000, or Tasha brought 40,000. So no need to calculate for Tasha. But Sarah will get 1,60,000 into 9/20, isn't it? And Varsha will get 1,60,000 into 6/20. So when you are calculating, you will get 1,60,000 into 9/20 means it will be 72,000 for Sarah, and 6/20, that will be 48,000 for Varsha. When you are totaling all these two, 72,000 plus 48,000 plus 40,000, you will get 1,60,000 itself. Okay. Here also you can, if you want, you can find out this. Okay, 1,60,000 into her share is 1/4. Then you will get the same. Okay, 40,000. So take this figure as a closing balance. This is the new partner's capital. So take this figure as your closing balance here. So here you will write balance carry down 72,000, 48,000 and 40,000. Okay. Now we will do the balancing. So first take the Sarah's account. So Sarah's account, check the sides whichever is higher. So I think here 60 plus, yeah, credit side is higher. So it will be, I think it is 90,000 something, isn't it? Yeah. So 90,000, write that amount. While totaling all these, you will get 90,000. And write that higher number here also. So 90,000 minus 72,000, that will go to cash account. Sometimes in your question they will mention transfer to current account. Okay, but here it is paying off into cash, they said. So we can write here cash instead of current account. Okay, if they are requesting you to post to current account, then write instead of cash, you write down current account. So that will be 90,000 minus 72,000 will be 18,000 here. And for Varsha, the total is credit side is higher. Okay, this side 50 plus 8,000 plus 4,000 and 12,000, that will be 70,000. So 70,000 you can write here also. 70,000 minus 48,000 will be 22,000. And here it will be same for the new partner. Okay, 40,000, 40,000. So this is all about the calculation of your partner's capital account and your revaluation account. If you are practicing, it will be easy. You can complete within 10 minutes itself. Okay. So this is the second method of your capital adjustment. So proportionate capital, I will show you through another video. Okay. Thank you.